Okay, good morning. Welcome to the weekly take on the market. Today is Friday, July 25th. It's about 8:30 in the morning Pacific time. It's now or never. Find that I'm saying that a lot lately. Have a webinar tomorrow, and so a lot on my plate as the day goes along. So thought I would do this now. So I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. Can't tell you what to buy, what to sell, what to hold, but with our compliance rules, we are allowed to participate in markets, and that's one of the great features of working here at IBD. That being said, as the market's open, it's unlikely I'll need to do something, but I might yell at you and say, "Hey, go get a cup of coffee. I need 2 minutes to get out of something or get into something." I don't know. I'm lightly invested. We'll talk about that as we go through the video. Um, but who knows? Yeah, I don't. Anything can happen in the market, so might have to do something fairly quickly and jump to it. And okay, so we'll go through the indices. We'll go through some ETFs, and then we'll do stocks to watch, and the quote of the week. So the usual drill. Goldman Sachs's price targets for the S&P. I think this was in the journal recently. I find this very amusing. I wouldn't want the job, but they're just price followers. So as the market goes up, they raise their price targets, and as the market goes down, they lower their price targets. So I just don't see the value add of a price target if you're just going to follow what the market is doing. And you can see here to start the year, they had a price target on the S&P of 6,500, which is not that bad a target, right? It was we sit here at 6,300 or something like that. But then the market went down, so they lowered their price target to 6,200. And then the market went down a little bit more, so they lowered the price target to 5,700. Then the market rallied, so they raised their price target, and then the market rallied more, and they raised their price target more. So now they're at 6,600. So this is one of the great institutions on Wall Street, and they can't get it right. So there's no point in us, us minions trying to get it right either. The market is so it's kind of a weird market because I have a lot of experience in the market. Sometimes experience is good and sometimes it's bad. The experience I have jades me a little bit sometimes. And so I see some speculative fervor in the market. It's not as bad as the 2000s, the 90s for sure. It's not nearly like that. Or maybe I just don't have quite the boots on the ground experience that I did then. But I can tell you, I was going to business school at night at UC Irvine while I was working, and I got my degree in 2000. I graduated in 2000, if you can believe it. Um, all anyone talked about at school, and these were all, we were all in our late 20s or maybe early 30s, because this was what they call the fully employed MBA program, the FEMBA, and it was just nothing but stocks. Everybody loved to talk stocks. And so I don't even know if I quite realized it then, although I had been reading about history, and so it bothered me a little bit, but didn't have the experience of going through some kind of bear market. So usually, like in hindsight after, we'll be like, let's say the market started falling apart tomorrow. We will, in hindsight, go back and say, well, that was obvious because, Bitcoin was running, Ethereum was running, OPEN, the real estate internet site. The other day, I'll pull up the chart if I can remember. This open stock traded as many shares as the NASDAQ as a whole, or more. In other words, whatever the number was, 18 billion in open, 17 billion on the NASDAQ. So you get these kind of little clues that there's some speculative juices flowing, so to speak. So here's the VanEck Social Sentiment ETF. I didn't even know this existed. I think I saw this in the journal as well, and indexed to maybe the April lows and the whole tariff thing. And you can see how well it's done. Oh, there it is. Price since April 8th low in the upper left corner. So it's up 65% since then. You know, S&P's done really well, almost 30, but this is done, twice that. I have never seen this chart before. I literally came across my desk like an hour ago, and I hemmed and hawed about putting it into the webinar because I've never seen it before. Let me turn off my camera, make sure you guys can see this. But I find it interesting, and when I look back, you can see when sentiment gets pretty high, you tend to get some kind of sell in the market. And the extreme pessimism works very well. Except it works extremely well. Extreme pessimism, which I've always said about sentiment, works so much better the other way. But we're in extreme optimism. So I don't know how I think his name is Warren Pies, Pies, on Twitter, is posted this chart. I think his firm is 314 Research. I don't know how he calculates this. There's some stats on here, so if you're interested in that, you can pause it and kind of read through this. But his thought process based on his work is extreme optimism. And that leads us to the one I normally use, which is the AAII sentiment. And it's just not extreme at all. It's, barely enough bears versus, barely more bulls than bears. I would think based on the market move off the lows that we would be a lot further in this regard, like 55% bull. Historically, in an environment like this, you'd be like 55% bulls, 24% bears, or something like that. And I didn't post it, but the consumer sentiment is really extremely negative, kind of weirdly negative. So that's a whole other ball of wax. It's hard to figure out as well. All right, so let's pull up the indexes. And okay, so this is a chart of the S&P in late 2018. I'm sorry, late 2017, early 2018. This market reminds me a lot of 2017. This current market, like right where we are, it's just stair-stepping higher, stair-stepping higher. Let's go ahead and go to the current market. See how it just stair steps higher. Just I think some guys on like Mark Minervini's group, they call it like a lockout rally. But so it's just stair stepping higher, stair stepping higher. So it reminds me a lot of that period. And I remember how tough that period was for me back then because I was running money at O'Neill and was underperforming the market and my peers, of course, some of the more aggressive guys. And it was very frustrating and hard and a difficult time because when you're running other people's money, you have like career risk and, versus underperformance risk as well, right? There's the risk of underperforming and then there's career risk if you're underperforming your peers and or the indexes. And it's very real. I experienced it. It was difficult. You're always wondering how, what are my colleagues in? How come they're doing so well? What stocks are they in? And I think the S&P. I have all my records. I probably could look it up, but I'm guessing if I recall, like the S&P did 30% that in 2017, and I did like 22 or something like that. It was less. It was good, but not as good as the indexes or the my colleagues. And it's so what have you done for me lately type of profession. It's like being a coach in the NFL. You go 12-4 one year, but you go 7-9 the next, and 3-13 the next. There's a good chance you're fired. They don't care that you went 12-4 2 years ago. So it's tough. It puts a lot of pressure on you. So you can see looks like it's never going to turn down. And all of a sudden, out of nowhere, see how strong this was? Just boom, you get a little gap down on the S&P here on January 30th. It's only 1%. Volume is up. And then you get a really bad break. So you finally have kind of what I would call like a shot across the bow. You finally break this uptrend line. Yeah, down 2% on the index. The volume is up. So you've got you've got 1, 2, 3 distribution days there in this little period. And if we fast forward, oh wow, I didn't even realize. And I'll be honest with you, I don't even remember what happened. I couldn't tell you what the news was or the why. Why did the market do what it did here? I haven't the slightest. I cannot recall what the kind of the catalyst was. So then the market tries to rally back. And it actually, okay, so now you're kind of in the correction or a bear market at this point, right? It may be too short to be a bear market, but probably a tough environment to be in stocks. And you can see, remember like how far down for it try to go again. But the bottom line is like this, the whole rally from like here on, when it just felt like it was never going to turn around, you know, would have tested you here, here, here. So for me, you know, I just kind of get pushed out of stuff as it goes up, and then it's harder to find stuff to get into because they don't set up. So it's possible that the market just stair steps here without me, but I don't have that career risk anymore because I don't run any other people's money. And so I can just be fine earning 4%, or, you know, every once in a while I go in there and grab a stock and usually like I prefer the higher octane stuff. So sometimes that's good, sometimes that's bad. But if it wants to just kind of stair step higher without me, that's being fully invested. I'm okay with that. Now you have to decide for yourself. Are you running your own money? You're running other people's money, or are you doing a combination of both? Probably if you're running other people's money. And you know, can you stand it? Have you gone 12-4 for 16 years with your clients? They'll allow you to go 7-9 one year or 9-7. But they won't allow you probably to do that for 3 or 4 years in a row. So it's a totally different mindset of that. So I don't know what to make of the market here. I'm not bullish. I'm not bearish. I'm just kind of, I'm looking for, I guess because I'm not fully in, maybe I have to caveat that. Maybe some people might interpret that as being bearish. Fair enough. I don't care. It's fine. I don't like the risk reward here. I'm just uncertain of the setup here on the indexes as a whole. But if I see something go like an LEU, I'll buy it, or an Oklo, I'll buy it. What else have I bought recently? MP Materials. These are not really S&P impacted names. You know, it's not really like the market falls apart. They're going to be impacted by that. But mostly they're going to kind of march to their own drumbeat. So I think the markets, if you're all, you know, all bulled up and looking for something to get you out, I would say like a break, like I showed you from that period. So maybe you draw like a trend line here, or if you really want more of a signal, maybe you draw like a trend line here, and you could do that on the SPY. Let's go ahead. Let me turn the pattern rec off. Let's go ahead and draw. I'm just going to draw the trend line like that, set an alert, and that might be my first signal. And then maybe if you want to be a little bit more conservative, give it room to breathe, you draw that, and that can be your second signal. And then honestly, I believe if it came back all the way back down through here, that wouldn't be a good. So now you'd have 3 signals. Maybe you sell a third, and at least you know you can sleep at night and you have some kind of plan, some kind of rules. I don't know how great these rules are. I just made them up on the fly, but a bad rule is better than no rule, I think, in the stock market. All right, so the NASDAQ, when I say a bad rule, meaning on the protection side, to protect yourself. Same thing with the NASDAQ, just stair stepping higher. It'll end when it ends. We'll worry about it then. But so far, so good. The Russell, I haven't looked at that in a while. Not that steep. It's okay. It's acting fine. Not all that great. Emerging markets, at least it made a new high. I think that should do it as far as the indexes. As far as ETFs, you've got I like to watch this one for sentiment. This granny one with Tom Lee, new high. So again, maybe I do this. Let's go ahead and do that. I'm gonna kind of my first signal. You wanted something steeper. It's pretty steep, but you could do something like that. Gold. So let me turn the panoramic back on because I believe it's in a flat base. It got really close. So let's see if it can break out. Silver. Give back some of the gains. One thing about gold, you can kind of see that looks okay. It looks like it's holding up, but it's making a series of lower lows on the RS line versus the S&P. Bitcoin, IBIT, broke out of this flat base. So the first kind of line in the sand for me, as far as maybe there's something wrong, would be if it came back into the base. Ethereum, it really broke out incredible. It's made a big move off the lows. Does that mean it has to pull back? No. Maybe it just consolidates here and then makes another run. It's possible. I don't know. I don't know much about Ethereum. I kind of, in the Bitcoin Coinbase area, I'm really more of hit and run. And I tend to use like Hood. I think Hood's a little bit more, I can feel a little bit better buying a Hood versus Coinbase or Bitcoin itself. ETF, what else? What else do I have in the ETF world that I wanted to cover? I think I have mentioned it before. I do own Platinum, so it did try to come out here and got pushed back. I really need it to hold for my style. It gets kind of in here, then I'm probably just going to move on. Maybe it just needs time. Looks strong on the weekly. Here, I got the scale. So I don't think there's anything wrong. I'm trying to hold on to it. I'm not very good at that, but so far I've held on to it with the caveat that I've been tempted to get out. But that, holding on okay there as far as that. ETFs. I don't know what's uranium doing. I haven't looked at that one in a while. Not doing a whole lot. Looks so okay, not great. And let's look at SMH. Intel had bad news today. I don't even know what the weighting in SMH is for Intel. It must not be that much. SMH is barely down. And I think maybe with the bad news, AMD acting really well, and NVIDIA. Yeah, so they're both up. NVIDIA barely, but they're up. And so Intel's kind of just off on its own. Market's kind of ignoring the weakness. And see how it's funny, because if the Intel had a bad day like today in 1999, oh boy, the whole market would be falling apart. In fact, I think I remember there was a really bad break in Intel in 2000. Yeah, I remember this bad break. So Intel was at basically all-time highs all the way into August and September. This is a leader. Let me turn off the index line. So here you are, the market topped in April, and there's Intel in November, still all-time high. Then it gaps down. I think this one's the earnings one. I can't remember, but based on that volume, this was a profit warning, down 22%. And that was kind of the end for Intel in that period. I think if I fast forward, that was like right there. You see it went all the way down almost to 20. All right, so let's look at some stocks. Starting with, well, let's look at the heat, the stuff that I like to look at. So like QBTS, probably should have been bought here. Little shake out there. Acting good. I don't own this one, but acting really well. RGTI broke out of a cup with handle. It's not exactly running away, but nothing wrong. Looks okay. This is super heat. You've got like Oklo. So this looks like a cup with handle to me. I know it's not long enough from a pattern rec standpoint, but that looks like a cup with handle to me. So that would have been the buy point around 68 or something, 71. LEU. So I saw this as kind of a high tide flag, and I bought that day, I think, or that day. I can't remember if I bought it and was down on it. I bought somewhere in there with the, and this is what I'll do. I'll buy it. Let's say I want 500 shares. I'll just buy 100 shares, and I'll talk. If you're attending the event tomorrow, I'll talk a little bit about how I like to do it. I'll just like Nicholas Darvis said. I'll buy 100 shares, and then I'll wait. And if I'm wrong, I only lose on 100 shares. But if it starts to go up, I might buy 400 shares there. So now I've got my 500, and then I might buy 200, and then I might buy another 200 or something like that. And then as it goes, I'm going to do some selling just because I can't stand it. Now, I don't think Nicholas Darvis would. He'd probably buy another 200, whatever, but I'll do some selling because that way I psychologically I can withstand this little bad break and withstand it. Because I just know myself. If I don't, I'll it's 250 one day and it's 208 the next. I'll be puking up some stock. I just cannot stomach that. So it's more of just the way, it's just a psychological thing. I know it's not the right way to do it, so to speak, but if I don't do that, what will happen in a sheer panic and anger, I'll get out of all of it at 208, and that doesn't do you any good either. So so this looks very good. I know it's speculative, but holding up if not very well, fairly well. All right, so like more in the institutional sponsorship area, Hood is the leader, I think. Hood is the best stock in the market in this rally. So if you're not in it, I'm not in it, unfortunately, not anymore. I think you have to watch it. Coinbase acting okay. MSTR is not acting as good. Broke out, and I don't want to say it's failed, but it's in the -6% zone, so it's close, if not having failed. If it breaks below this, I would say that the breakout has failed. What else is going on? I apologize. I'm going to pivot again to Bloom Energy. I do own this one, more speculative. I just really like the energy area. I don't know if you heard Jason Shapiro on IBD podcast, but he talked a little bit about it. And I just, that's where I agree with him. It's hard for me to get excited about like Meta, for example. Now, Meta is probably going to win the AI. If anybody wins it, right, you would think AI would win. I'm sorry, Meta would win along with 5 other companies, but you would really think Meta would be one. And Meta is acting really well. It's up 8% from the pivot. Looks very constructive, but they're just spending so much money that cash flow that's just flying out of their coffers. It's like I'd rather be like, where is that money going? Who is it going to? Nvidia, AMD, maybe data centers, maybe energy plays, maybe. So like Talon, which I've owned before, and just gosh, it just was so close. And this will go to my my quote of the day, but that was the buy. I knew it. I just hesitated, but that was the spot to buy Talon. Yeah, it gapped up 2 days later. This is total luck, honestly. I didn't expect that, but that's how you wait for those setups. If you miss this and you're patient, you wait for the pullback to the 50-day and you just buy it. If you're wrong, you're wrong. But you have to buy that if you like that name. VST hanging in there. What else is in that energy area? VRT looks a little tougher, but acting okay. But it's no real buy point, so to speak. What else is in that energy area that there's so many of them? NBIS is very speculative, been tough. I am no longer in this one. I just found it just a little too even too whippy for me, if you can believe it. But that one's in that, I don't want to call it energy area, but data center area. And then of course the Oklos of the world would fall in that category too. All right, so let's look at some of the big boys. NVIDIA, nothing to see there. Amazon, nothing to see there. Google, they reported earnings, nothing to see there. These are they're market stocks. If the market goes up 10%, they're going to go up 12. If the market goes down 10%, they're going to go down 14. That's what I think. So I don't have a lot of courage of my convictions in these names. I'm looking across my screen. Tesla, the quarter was awful, god awful. I am short Tesla with some inverse ETFs. And it's just, again, when it gaps down, I'm starting to feel like I should have just taken it off. I have a little bit of cushion still, but God, it's just when it does this, you're much better off just taking it off. Gaps down, just take it off. And so today it's like up 5%, just out of nowhere. But the quarter was gigantically awful. The cash flow was awful, and everything was awful. But there's a story, there's a narrative there. And so if that narrative breaks, I think the stock goes a lot lower. But if that narrative doesn't break, then the stock could go higher, could go a lot higher, because the people really believe in that narrative. So got this thought. It's not drawn very well. I'm going to delete that. I'm going to draw it more like that. But that's how I would buy Tesla if you're interested in it, breaking above that trend line. I think I'm going to leave it there as far as stocks. I didn't mention ARK, but let's look at ARK. I haven't looked at it in a while. And this is a great barometer for the market. Again, very much like 2017. If we go back to 2017, I feel like this was, let's go to the weekly. You see how it just started? It's to come out of a really long base. Like the market just really started to reward this style. So it breaks out in the low 20s and runs all the way to 44. Kind of put ARK and Cathie Wood on the map. This move. This is probably the first of the moves that put them on the map. And then, of course, the COVID one really helped them because they did tremendously well in the COVID bull market. So I like it as a barometer, because if the market is in that kind of risk on appetite, ARK's going to do well. If you're not in it, I'm not. I don't say you have to watch it, but you should watch it. Give you a good idea on where the market stands. All right, I think I'm going to leave it there. Okay, the quote of the week, and just because I was pressed for time, I apologize if you're like, Scott, I've seen this one before. You might have even seen it twice. But somebody asked me to review it, and I was building the slides, and I was like, oh, I don't have a new quote. So it is what it is. You're welcome to turn off the video at this point and say sayonara. But this is really, I love this kind of thought process. It really keeps me in line. And when I don't follow this thought process for trades, it bothers me. So like the Talon, it was, I didn't use this for TLN on that bounce off the 50-day. And step one is the courage. I didn't have the courage to take the trade, even though I was waiting for it to pull it back to the 50-day. It did exactly what I wanted, and then I didn't pull the trigger. So step one in any trade you put on is you got to have the courage to put the trade on. And what creates that courage is knowing that you have a plan to get out if you're wrong, right? So you know, okay, if I'm wrong, I'm going to lose X amount. I'm okay with that because I might make Y amount. So if you just kind of say, oh, I want to buy it just to buy it, if you don't have any plan to get out, then it's going to hurt that kind of courage aspect. So have the courage to take the trades that you've decided are tradable. On the weekends, when I put an alert on a stock, if the alert goes off, that's why I told you guys, hey, if I might have to put you on pause it, because if one of my alerts goes off, I'm going to go buy that stock, because on Sunday, for whatever reason, I decided I wanted to buy XYZ at $50. So if that alert goes off, I'm going to go buy it. Then you have to have the patience to allow it to work. I'm not great at that. I'm getting better, but I'm not great at it, admittedly, but I'm trying. I really am trying. So it's an important part. Hood is a good example. You know, I'm out, gosh, so many points ago, and it was a big trade and a big conviction trade for me. So one, put the trade on, check. Plenty of courage to do that with Hood. Two, patience. Give it a chance to work. Let the stock breathe. As long as it's not hurting you. Okay, so there's patience too. 3 is imagination / vision. I think I added vision or I added imagination. When I found this quote, I don't remember which was which, but I like the word, I think it was vision, but I like the word imagination better. Stocks will go so much higher than you ever could imagine, and they will go so much lower than you could ever imagine. It just look throughout history. Just pull up one time, just start randomly putting in tickers of stocks and look at the monthly chart. Like even NVIDIA, look at the monthly chart of NVIDIA. I think I hope it's them, and because I don't want to disparage anyone, but without getting it right. But I think it was like Motley Fool, let's say, recommended NVIDIA at like, I don't know, 40 cents. I think it was them. And then they had, I think, a double in it, 61 cents or 50% or something. And then it went all the way down to 6 cents, 90%. And then it went from 6 cents to 99 cents, which is, I don't even want to do the math. What's that? Almost like a 40-fold move. And remember, these are all split adjusted, of course. And then it went from 99 cents down to 10 cents, 90% correction. And then it went back up to 63 cents, 4-fold move, 3-fold move. And then it went here from $1 to $8, $7, 7-fold move. And then it corrected 7 down to 3. What's that? 50 some percent. And even here went from 34 down to almost 10. So 34 to 11 is what, 60 some percent move. So corrected 67% down. Now, in hindsight, it's like, oh, no big deal. You just wait, they all come back. No, they don't all come back. This is one of the great stock market success stories of all time. If not the greatest. I mean, maybe they're like Monster or Taser or Cisco is better. I don't know. I haven't done the math, but I would bet a lot of money it's in the top 10 to top 20 of greatest success stories in stock market history. So most of them don't come back. So you have to have the imagination that they can go a long way when they're going your way. That way it helps you to stay with them as best you can. I'm not very good at that, which is why I use this saying. But also it works the opposite way. When it starts going against me, unfortunately, I have the imagination that, hey, this could go down a long way, which is why I tend to get out, unfortunately, too soon. So it works in your favor and it works against you. Like every stock market rule, like every style or strategy in the stock market has a yin and a yang, a pro and a con. You show me a strategy that doesn't have that and you'll be a billionaire in about 9 months. And then last but not least, super, super important is execution. You have to execute all those things. You got to put the talent trade on. You got to let it go up while it's going up. Be patient, not cut your winners short. How do you do that? Well, you imagine it could go a lot higher based on what you've done, based on the work you've done, and you got to execute all of that. So it's a lot. It's not easy, but I will tell you that if you can get this 30, 40, 60% right, because that's honestly probably what I'm getting right in every trade, is I'm probably, like, in a perfect world, I'm probably getting 30 to 60% of it right. Like Circle, for example, is my best winner this year. It's accounted for, I did the math for the webinar tomorrow. It's in my deck, so apologize. I need to do the math. 28% of my profits this year were from Circle, and I sold that, and honestly, way too soon based on where it went. But 28% of my net profits were from that stock. So it tells you that you don't have to get it perfect, but if you can get this, gosh, 40, 50, 60% right, you'll be really happy with the results. All right, as usual, I thought this would be a lot shorter than it was. It's 9:12. I got to run. 800-831-2525, market surge at investors.com. Next week is Harold and Arnie, so I will get next Friday off. Have a great weekend, everyone, and we'll see you in a couple of weeks. Thank you very much.